It's another crazy day for the metals market. You can see gold hit $5,600 this morning. Every day I wake up and I get a new surprise, and silver hit $120 overnight before starting to retrace a little bit now. And I did this tweet when I woke up and I saw this. I said, "Dear Bitcoin, you're supposed to be digital gold. Please start acting like it." Over the past couple of days, I've spoken in depth about what I think happens in terms of the Bitcoin and gold trade. Today, I want to talk about something different, and that is this sentiment that 2026 is going to be a bad year for Bitcoin. Ben Cowan has been coming out and talking about how 2025 and 2026 were never supposed to be fun for Bitcoin. He's done multiple tweets about the 4-year cycle and how we potentially could be heading into a crypto winter now. Well, I'm going to show you the data later in today's video, which suggests that I don't actually think this will be the case. And in fact, I think Bitcoin could make a move that catches people off guard. But before then, I want to come in and give you guys an update today to stay consistent here with the updates on the channel and make sure you're informed with everything that's happening. So if that sounds good, make sure to smash the like button, smash the subscribe button as well, and let's get into things. So looking at Bitcoin right now, we had FOMC yesterday. It was a little bit of a nothing burger, but Bitcoin did react negatively in the Asia and the London session so far this morning. Look, I'm going to really simplify things for you right now and tell you exactly what's happening on the chart. This level here, this red level, is really the only level, it's around 90K, that you need to be paying attention to right now. This is the major pivot on the chart, and until we can get over this level, you have to be cautious. And if we start to close on the daily and confirm above this level, then you can start being a little bit more optimistic. This ultimately is my risk on versus risk off gauge in the market. What I'm looking for is Bitcoin to reclaim the 4-hour noodle as well as this mid-range zone and start to confirm above. Then we can maybe look towards taking out these highs. If not, I think it's only reasonable that we maintain a bit of cautiousness in the market because we still have these lows down here. We still have these lows as well, which we could potentially come and take out now in the coming days. So in terms of my trading, this is the level I'm playing off, keeping in mind that we are just in a broader range on Bitcoin. You have your highs at 94 to 95K. You have the wick low here at 80K, and that is the mid-range point. Kind of boring. In fact, very boring for Bitcoin, and I know we all wish price would move. I'll get into later in today's video why I think that and how I think that move could come, despite other major analysts in the space expecting further downside on Bitcoin. But that's the reality of where the market's sitting right now. And I think for a lot of crypto people, as we've been discussing on the show, the fact gold keeps going up, the fact silver keeps going up is hurting you. And to be honest, it's hurting me as well because I allocated a little bit to gold. Last year, I had plans to allocate even more to barbell my crypto portfolio because I think at the moment they're inversely correlated and I didn't get the entries I wanted on gold. In fact, I had some really nice orders set around like 3,800 and then again at like 4,200, and these orders didn't fully fill. So I've been left sidelined. The silver trade doesn't hurt me as much because I was never like a big advocate for silver. I couldn't really find a strong place for it in my portfolio, but the gold one definitely hurts. I will say this though, if you're on the sidelines now thinking that you should rotate your Bitcoin into gold, I would definitely warn against that. It does feel like the metals trade is getting very, very crowded. I mean, this is a textbook parabola. Of course, it could keep going parabolic, but because you have upwards volatility, when that volatility eventually shifts, and there could be a number of triggers for this, for example, some of the geopolitical stuff being calmed down slightly, let's say the US dollar jumps up, we see some inflationary pressure, there could be many reasons that could put a bit of pressure on gold. And because there's been such crazy demand, which is now transferring not only from the central banks, but also retail and future speculative demand, if that drop happens, it could be a lot worse and it could be a lot more stark for gold. So for that reason, I think you have to be a little bit wary, and I wouldn't be advocating aping into gold. But I'm still, because I'm trying to build a balanced portfolio over the next 5 to 10 years, interested in adding gold, especially on dips, just to continue to have, that 5 to 10% weighting. I am much more interested in Bitcoin, however, over a higher time frame, and we'll discuss later in the video why, because I think the risk-reward proposition in terms of Bitcoin is looking better and better. In terms of the other metals, though, copper is doing really, really well. This is one that I actually spoke about on the show. I believe it was last week. If you watched, I did a full research report in my Discord. This has started to break out. This is one of my positions. Didn't get a huge entry on copper, and I'm not as big of a fan, on copper as others, because I still think prices are relatively high and it's catching a bit of like an associative bid versus the other metals, despite its catalyst being very different. Essentially, it's like a hybrid play between AI technology and metals. But I do prefer it to silver. I think it's a bit less parabolic, and I like the underlying narrative, but I wouldn't be treating this as, a hedge to silver or gold. I think it deserves a separate spot in your portfolio. But if you are looking at gold and getting FOMO, I'm in the same boat. However, I think you have to maintain a level head and really ask yourself objectively, because what's happened in the past doesn't matter. You have to ask yourself, what is going to happen from now onwards? And I think there are other assets which are looking slightly more attractive, in my opinion, Bitcoin being one of them. But now I'm realizing that is becoming less of a consensus bet. In fact, it is a little bit of a divisive bet at the moment, a contrary bet to what the market is feeling, because I think a lot of people are now starting to lose faith in Bitcoin. And I mean, even myself, if you told me 1 year ago in 2026, so right now we'd have a lower dollar, the dollar is going down. We affirmed that on yesterday's show. The dollar, in fact, broke down from the 96 level. It continues to go lower. Typically, that is good for risk assets, including Bitcoin. Lower interest rates. Of course, they paused interest rates despite Trump calling for even lower interest rates, but overall the trend has been down. A new Fed chair, who is coming in soon, rapidly increasing global liquidity, which there's a bit of nuance to this because there is increasing global liquidity, but the type of liquidity that is being injected hasn't found its way to many parts of the economy, which are more sensitive to risk assets. So it has been more of a debasement trade and flight to safety trade that's seen the metals run. It's a little bit different from 2021, where that stimulus was pumped directly into the economy to consumers. And the fact that rates aren't as low as they were towards the end of the cycle means that there isn't as much supportive monetary policy in the market right now, which obviously Trump has been calling for. So there is a caveat here, but overall, global liquidity has been increasing through, specifically in China. In America, there's also talk, as we discussed in yesterday's video, of potentially you see a yen bailout. This could be a short-term liquidity measure, which could be good for markets. That's actually a very bullish scenario, in my opinion, for Bitcoin, but we need to wait to see if we get it. Further currency debasement, we've continued to see this. Obviously, that's reflecting slightly in the Dixie, but this doesn't paint the full picture. The real way to measure debasement is obviously relative asset prices, versus a basket of assets. Let's say, gold, metals, energy, groceries, real estate, just general inflation. All-time high stocks. Stocks continue to push the upside. They have experienced on open a little bit of weakness, but they still look very strong overall and obviously continue to make new highs, even though metals have been outperforming. If you told me all of this was true this time last year, when Bitcoin was sitting around 100K, I would have thought we would have at least extended another 50% to 150K. So as I said at the bottom of this tweet, either the market is mispricing the asset or something has gone terribly wrong. Now, I actually think it's a mix of both. I think the market is mispricing Bitcoin. I think the market is disrespecting Bitcoin, but it's only doing so off the basis of negative catalysts. For example, OG whale sell pressure, the DAT unwind, fears around quantum computing, and not fully supportive macroeconomic conditions for Bitcoin itself. Because as I mentioned, the same reason that metals are running don't specifically apply to Bitcoin. This is more of a flight to safety run than it is a pure bet on debasement. The real reason gold is running is because people are losing trust in the system. So they want to flock to an asset that they trust. It's basically an uncertainty play. And Bitcoin as an asset, let's be completely objective with each other, it's an uncertain asset as well. It's not a fully secure asset that everyone trusts. Now, we have seen institutions starting to come into the Bitcoin market. We have seen more and more interest through the ETFs, more and more institutional interest. 2025 was a big year for that, but it's not fully established on the global scale to where central banks, like with gold, would start parking their money in Bitcoin during times of crisis. So that does limit Bitcoin to a fair weather asset. It's an asset that will perform really well during fair weather times in the economy, but it's an asset that is put under pressure during tough times in the economy. But it means when the stars align, you can have, because there isn't this fully crowded trade like metals where a lot of people are positioned, because it's not as crowded. When people do come into the trade, it can be absolutely explosive. That's why I think at some point Bitcoin will catch people off guard, and we'll discuss that later in the video. You can see that the CCC Yield Bonds Index, which is interest rates, which typically drive Bitcoin, have started to diverge from Bitcoin's price as well. So this disconnect in the market, as I said, the market mispricing Bitcoin is relevant across a variety of indices now, and some of which we'll discuss later in the video indicate that Bitcoin is severely oversold. Like even the Mag 7 correlation is severely oversold. Like Bitcoin was tracking equities pretty much the entire cycle, and it's now started to significantly diverge. Now, historically, Bitcoin does end up recorrelating. We've seen that over a period of years, but it's still a really painful period in the interim, which I feel like has caused a lot more people to puke their positions. And of course, the fact this is lined up with the 4-year cycle, which I do think is a bit of a myth, because it's more to do with the business cycle than it is the 4-year cycle in terms of halving. I think that's too obvious, in my opinion, and doesn't really make much sense considering the impact of the halving, diminishes. It halves every single time there's a halving. But because of the timing, this has caused a lot of people to start to flip bearish Bitcoin. I actually did an experiment before this video. I went into Reddit. I don't usually go into Reddit for crypto or investing advice, but I just wanted to see what people were saying because it's more of a retail platform, and that is the dominant narrative. And it's also a narrative that analysts like Benjamin Cowan have been touting as their reasoning, or one of the main reasons alongside momentum for us entering a bearish phase now on Bitcoin. And that's something I want to break down because I want to give you my thoughts on whether this is true or not. Spoiler alert, I really don't think you can predict the market like this. This doesn't make much sense to me based on what I believe Bitcoin to be as an asset, but we're going to get into that in a sec. Just before we do, let's pick a few people to win the $100 for the Noti Gang. Make sure you have notifications turned on and watch every video to see if you've won. Ahmad, you win $100. Lily, you win $100. Mark, you win $100. Ethan, you win $100. And Masad, you win $100. So comment on the video today if you want a chance of winning in the next one. Make sure you have notifications turned on. And we're doing daily uploads at the moment, so make sure you don't miss an update because things are changing a lot. For example, like Bitcoin was teasing a break above this level yesterday. Like we started to have an H4 flip, but we didn't quite clear above the daily level. And it's really important that we get a daily close because as I said in yesterday's video, I wasn't interested in preempting ahead of FOMC because I knew that there was going to be volatility, and that's exactly what happened. If I had started, preempting an entry before full confirmation, I would have gotten wrecked. So that's why, you need to be watching every video because yesterday I warned you, don't open new positions into FOMC. And now we're starting to see the market come back down. In terms of really local price action, before we get into Cowan's thesis and whether I agree or not, I think it's hard to argue that this is bullish. I mean, technically you have lower highs. You have your high here at 98, another lower high at 95, another lower high at 91, another lower high at 90. This 90 high, this swing high is really the level we need to get back above in order to assert some sort of bullishness. I mean, technically you could argue this is a higher low, but pressure is building for Bitcoin, and that pressure, unfortunately, right now seems like it's to the downside. So I'm hesitant to heavily position even some of the altcoins that I'm interested in buying. For example, there's an MNT buy that I want to make. We're heading into support now. I'm trying not to front run support, so I'm trying to gauge reactions to supports given how Bitcoin looks. So I think this is actually important advice in general. When you are opening new altcoin positions, don't do so in isolation, especially when the market is this Bitcoin driven. Always do so, keeping in mind where Bitcoin is. For example, if you have an altcoin coming into a support, but you have Bitcoin flipping a key level, that is then the time to open that altcoin position. Whereas if you have Bitcoin struggling, making a downtrend, and an altcoin is making a retest of a support level, but it's just been making lower lows, then you're catching a knife. And if Bitcoin came back down to sweep these lows, then you're probably going to be invalidated on that position. So I think in a market like this, it's more important now than ever to validate your altcoin trades, keeping in mind where Bitcoin is on the chart. Now, this doesn't mean I won't buy any altcoin if Bitcoin looks bearish, because you've got to remember, time frame also impacts how you will enter. For example, if you go into the daily chart or even the weekly chart, it paints a different story. It doesn't paint a downtrend like it does locally. It just paints sideways chop. So if you're willing to weather the storm for let's say 6 to 12 months and accumulate some alts that you think will be really popular later in the year, then it's actually fine to just accumulate some. Like I did so with Hyperliquid, I did so with Pump Fund, and I'm going to be holding them, probably for the majority of the year, if not longer. But if you're trying to get good entries locally, and that is obviously something you want to do if you're trading, or even if you're just trying to optimize risk management in this market, then it's important to move down the timeframes and look what Bitcoin is doing on the lower timeframe. So just a bit of alpha there in terms of actually entering altcoin positions and how I look at the market right now. Now let's go into this post that I saw from Cowan, because he outlines basically the 4-year cycle theory for Bitcoin. And if he's correct, then last year and this year should technically be a bear market phase for Bitcoin. Next year and the year after should be accumulation. And then 2029, 2030 should be uptrend. I'm going to give one caveat. There's obviously the ultimate caveat of Bitcoin is an asset that thrives on liquidity. It's an asset that thrives on easing conditions. It's an asset that thrives on low interest rate environments, and obviously interest rates are coming down. There's the whole macro discussion around how Bitcoin fits into the economy. But even a really basic argument I would use to challenge this, like beyond the doubts I have about the 4-year cycle, is I just don't think with how fast the economy is moving that the cycles would take this long to play out. Like, I mean, look at how fast gold is moving. Look at how fast AI is moving. Look at how fast the economy is changing. Look at how fast the equities market is running. The markets are running so fast that you have like these multi-month, not even multi-year anymore, like echo bubbles. Like gold will run really hard for a few months and then it will correct, and equities will run really hard. Obviously, it's up and to the right overall, but the cycles are happening really quickly. It's hard for me to believe the cycles for Bitcoin will take this long in a market that is, changing this fast. Now, one thing I do agree with Cowan on is that Bitcoin will hit $1 million. I think, and I'm going to get into later in the video, what's happening with gold right now has actually made me more bullish on Bitcoin longer term, believe it or not. Even though it does have slight identity crisis short term, even though people are doubting the narrative short term, long term it's in a better spot than ever because of the new anchor price that gold has set. And I have a new perspective on that versus what I said yesterday that I want to share today. Cowan said that midterm years are typically bear markets for crypto. Once again, like this is and I'm not trying to shit on Cowan, by the way. He's called the market really, really well. In many cases, better than me. So this is not the point of the video. I'm just kind of using him as a proxy to discuss these things in an open forum. I think that you have to be very careful in markets when looking at small data sets. Like how many midterm years have we had with Bitcoin as like an institutionally recognized asset? Well, this is technically the first one. If you want to argue Bitcoin was in the mainstream sphere last cycle as well, okay, then you could also argue we've had 2 cycles. But like if you were running a scientific study, would you look at 2 data points and then assert that, that is valid to come to a conclusion? Not really. So that's also where you have to be very careful about correlation and causation. And I find it really hard to extrapolate like, last time, and the market's completely different from last time. You could see that with gold. You could see that with, the geopolitical responses around the world and how markets are responding to liquidity and what's happening with the yen. Like, obviously last time, this is what happened, but it doesn't mean that it will happen this time. The only time I take these trends into account is when it's like a multi-decade trend that plays out. But even like with the halving cycle, the halvings had way more impact in the early days, of course, because the first one literally represented 50% of Bitcoin supply. 2, it was much less forecast. There was an information asymmetry. And 3, even then, we're only talking about a 12-year span here. That isn't a long time to, assert a trend. There's only a few variables that would constitute that trend. So the 4-year cycle for me is not something that, I'm a big subscriber to. And as you can see, in this graph here, until very recently, Bitcoin has more so been correlated with equities and has been more so treated like a risk asset than it has anything else. It's not really the 4-year cycle driving Bitcoin. It is risk overall. The only time that this has started to now be questioned is over the past few months. And there are many reasons for that. We discussed them earlier in the video. We've discussed that in past videos. Bitcoin has had a lot of sell pressure. Bitcoin has also, there's lots of rumors that, MicroStrategy and has actually been shorted by big institutions, and there's been pressure put on Bitcoin that isn't typical, and that's caused this discrepancy to widen. And I think the final nail in the coffin for this discrepancy widening are these events here. Seeing metals go up so aggressively has caused a lot of Bitcoin people to start to question their thesis. But we know that Bitcoin does behave like a risk asset. It does behave like a liquidity sponge. It doesn't historically behave. It has a lower correlation to gold, which is funny because people say it's digital gold. I think it's in a very strong position to become that one day because in many ways it's better than gold and we're heading into a digital world. And, people seem to forget as well about gold that, people mention quantum computing for Bitcoin. People also forget to mention that the supply for gold will also, it's not fixed. It will increase over time. The law of the market is that as price goes up, there'll be new demand for gold. And with advancements in AI, just like advancements in quantum computing, robotics, advanced drilling techniques, advanced mapping should also help us extract more gold. I'm not talking about the crazy astro mining theories, but they obviously exist. Like gold isn't without its own supply threats that obviously take a while to play out. Like, by the time you source new gold, production gets up to standard, and by the time some of this technology is implemented, we might be talking about 5 to 10 years. But these risks do also become apparent in the gold market. We're already seeing some of, the risk become apparent in terms of the illiquidity of gold, the difficultness of transferring gold. Whereas, Bitcoin has these things in abundance. It's very easy to transfer. It's very easy to divide. It's, proven by energy. We're heading into an AI world. Everything is going digital. CBDCs are happening. Institutions are adopting the blockchain. Like, crypto is the future. I have 100% belief that crypto is the future, and Bitcoin is the most trusted asset. It's the number one asset that's been adopted by institutions, and it's the best placed asset, in my opinion, to take the mantle alongside Ethereum. I think Ethereum has a strong case as well, but Bitcoin has a slightly stronger case. So despite this discrepancy in the short term, I have conviction that long-term Bitcoin will be a great investment, and that at any moment, Bitcoin can really, really perform. We typically see when the US dollar breaks down and has periods of underperformance like we're seeing at the moment, Bitcoin can also run quite aggressively. So there is a correlation to a lower US dollar. The only reason why the lower US dollar right now isn't affecting Bitcoin positively is because the market is quite shaky, because the driver for the lower US dollar have been some of the recent events surrounding what Trump's doing internationally, which is spooking markets, driving the dollar down, lowering confidence in the dollar, and lower confidence in markets don't necessarily bode well for ultra risk assets like Bitcoin. And mind you, during this recent period, although equities have been doing okay, and this has largely been driven by AI, they're not doing amazingly compared to gold either. So the market, you have to kind of distinguish as well. Like, you could say, oh, the dollar's going down, why is it Bitcoin pumping? But you have to understand why the dollar's going down. It's all cause and effect. And the same reasons why the dollar's going down now aren't the exact same reasons why it happened in the past, which triggered risk assets to really, really run, equities alongside Bitcoin. But that'll change, that'll shift. And at some point, Bitcoin will have its time. Metals will slow down. I know they're going parabolic now, but all the guys that were FOMOing metals will then be FOMOing crypto again. And all the guys now that are, FOMO crypto are now FOMOing metals. Like, this thing goes in cycles. At the end of the day, all these assets are going to do well over a 5-year period. Like, if your thesis is that currency will continue to debase, if your thesis is they'll print more money, if your thesis is that over time the economy should become more productive with AI, like, most assets will go up and to the right. If that is the general trend we're following, and I think most people would agree we are following, they will just oscillate at different moments based on the catalyst at that specific time. Ben Cowan said he predicts there will be no crypto rally from the precious metal surge. And I actually 100% agree with this. As I said in my tweet, gold rallying does not guarantee a Bitcoin rotation. But what it does do is ensure that the next time Bitcoin pumps, the ceiling is much higher. So what's going to happen, and this is the really powerful thing, it's actually why I'm low-key, even though I missed most of the trade, I'm low-key happy that gold's running. Next time, there is a strong narrative for Bitcoin. So let's say, and this should happen, there's more economic expansion, there's more stimulus, rates continue to come down, the dollar stays suppressed or drops, more confidence is restored. At some point it will be restored because, once again, these things oscillate in the US and in the US economy. When fresh speculators feel that it's the right time to go into Bitcoin, they're now going in with a much higher price anchor, because the narrative is that Bitcoin will become digital gold. So now the anchor of gold, instead of being 10 trillion, 11 trillion, 12 trillion, it's weird seeing it at 38 trillion, because I remember so many times for years I would go into this graph on shows and in my own research and I would see 12 trillion. So it's kind of wild to see that. But Bitcoin was actually above silver at one point. So what I mean, things oscillate. But they won't be looking at, a 10x discrepancy anymore. They'll be looking at a 20x or a 30x discrepancy, because gold is now at 40 trillion, maybe even 50 trillion, 60 trillion. So the opportunity becomes so much higher. The anchor price becomes so much higher. It's just like if Ethereum is at $5,000, Solana also gets a lift from that, because Solana is viewed as an ETH killer or an alternative L1. So the anchor of Ethereum helps Solana get revalued. It's the exact same thing. I mean, across most coins, like if Tau went on a huge run, other AI coins should reprice against their leader. If Bitcoin's digital gold, then the next time fresh speculators come into the market, Bitcoin will also reprice based on gold's price. So this isn't a rotation. Gold buyers aren't going into Bitcoin, but fresh speculators will look at gold's market cap to justify potential upside. So ultimately, the higher gold goes, the bigger the upside for Bitcoin eventually. And that's why I'm more confident now than ever that Bitcoin can hit $500K, $1 million, $1.5 million. It's harder to justify, when gold's $2,000, but when gold's $5,000, $6,000, $7,000 potentially, it's much easier to justify Bitcoin should command 10%, 20%, like what percentage of gold's market cap? That's obviously something for you to work out. I think it should command a pretty solid chunk, considering it is in many ways superior to gold. It's just not trusted in the same way by the market. And these things take time. So if I was allocating to an asset today, I'd choose Bitcoin over gold, even though that, gold could very well outperform over the next 6 months. In terms of whether I think we are in a bear market this year, Bitcoin very well may continue to trend down, and I'm just using the line in the sand for this and momentum for this, and we're going to track this every day. So I'm just going to be a momentum trader. I'm not going to try and predict anything. It may trend down. However, I do think you will continue to see assets overall be quite supported by the market, be quite supported by policy. And in that environment, it's hard for me to see, unless there was some like massive forced seller or something of Bitcoin, it's hard for me to see a 60K Bitcoin if stocks keep making higher highs. The biggest risk, I guess, for Bitcoin would be like a big pullback in equities and metals. However, I think a lot of Bitcoin's weakness has been priced in, so you actually may see Bitcoin holding up in an environment like that, because anyone that really wanted to shift out of Bitcoin, a lot of the sellers that wanted to exit have already exited. Of course, you'd have pressure from fresh shorters coming into the market, so I'm not saying Bitcoin would be immune to an equities pullback, but I don't think it would be a total disaster, but that is still, the tail risk that I thought I would suggest. But if you think equities will continue to go up, there should at some point be a Bitcoin catch up. And that is how it's historically been. When Bitcoin has led and equities have lagged, or when equities have led and Bitcoin has lagged. Another interesting fact, gold has added 1.75 trillion in market cap just today alone. The market cap of Bitcoin is 1.78 trillion. This is what I'm saying. Like all it takes is one institution, one central bank, just one serious party to allocate even 1-2% of their gold holdings to Bitcoin, and all of a sudden Bitcoin can double in a day. I'll go 50% in a day. Like gold literally added Bitcoin's market cap in a single day. So it's not. Just because Bitcoin is so much lower, comparatively, it just doesn't take much capital to pump it, which is why I think it's rising tide lifts all ships. As gold, silver, and equities in general become more inflated, Bitcoin will eventually reprice. You're just dealing with a period of lag in the meantime. So that's what I want to come on and, give you a bit more nuance on today, my perspective on the market. In the shorter term, clearly, this is how I'm thinking of the market in terms of 90K being risk on versus risk off. And I'm doing a good interview with a massive fund manager tonight. I'm going to ask him some of the tough questions about quantum computing and why does Bitcoin have an identity crisis. These topics we've been discussing on the show, so make sure you have the notifications on for that. I'm having a discussion with Fabian tomorrow, the analyst from the Discord. He's been crushing it recently about how he views equities. That's going to be a great macro show. We're bringing back the Friday show, and then I'll have some banger evergreen content for you on the weekend, which we produced earlier in the week to explain some of these things in more depth. So I'll see you in the next one. Have a lovely rest of your day. Peace out.